Good morning, guys. Hope everyone is fine, and I hope you are ready for the new trading week, and you are ready to take advantage of the market and do what needs to be done. So, welcome to Prime King Trading Institution YouTube channel. Here we analyze based on price action and what the price is doing, patterns, and all that. We trade them. We are able to identify, spot them, and then we hit it. We hit it hard. So I'm going to take you through this week's pair, actually today's pair, today and tomorrow's pair, what you can do to this pair to take advantage of the market. Please note that this is just my suggestion and my opinion of how the market might act and what I think according to my strategy. So maybe your strategy is telling you something else. It's up to you to make sure that you trade that and you take advantage of it. So it's still cool, still okay. So this is not a signal, guys. It's just what I think, my opinion of the market. Don't take it personal. Don't start saying, yeah, this guy is posting setups which are not working and all that. They might not work. Sometimes they will work. That's how the market is. That's how forex it is, guys. All you have to make sure is that there are more wins than losses. Shouldn't always be on the wrong side. Then that's when you'll know that something is really up. So AUDUSD, I'll take this pair from the weekly time frame, guys. So from the weekly, what I see with the market is this. So the market was just moving. You can see how the market was impulsing to the upside, impulsing, corrected, impulse. So now we're here, and this is what the market did. The market rejected to this area. This is a high value area, which some of you might call it the resistance, or the resistance support. That's how people call them. But I see, what my strategy tells me is that this is a high value area. So you can see how the market rejected here in the weekly. The market rejected this area as a high value area. It rejected it nicely, to the downside, and because the market was already channeling, it broke out of this structure. So we'll be going to the daily time frame to be more specific and look at get more detail from the market. You can see how the price was moving. The price started moving and then it went up, forming this ascending channel type of formation. What the market did, the market started, then broke out, then retested this area, then went down. After the market went down, it formed something like formally retested this area, formed something like a double bottom or so, kept consolidating around this area or forming a correction around this area. Then it went up again. Now when the price got into this high, what it did is it started now rejecting this area. It rejected it twice in the lower time frame. I think this one is on the H4. You'll be able to spot this double top, so here you can see what the price did, this sort of double top formation. So this, what it means, what it means. The price is going to, what I'm expecting the price to do, the price to go here. I'm expecting the price to go to this low, retest this low, or maybe go up again or down. That's for the market to decide, but we are just traders. We want money, we want to be in and out. So this is just for you guys to take advantage. If it's possible, if the trade moves our way, we'll take the advantage of the market and make sure that we trade it. So going back to the H4 time frame now, H4 time frame, what I see, what the market has done here, the market was forming a correction. You can see what the market was doing, moving up. Then when you got to this area, the market failed to break the area again. It came down, then it failed, again, forming something like triple top here, which is a reversal pattern. You can even see here, this was some kind of a wedge formation. Wedge formation here, wedge formation, guys, wedge formation. To see things clear, to get a clear picture, you can go with the line graph, because it's always clear when it comes to patterns. It's able to identify them nicely. It's able to, you can see this is a wedge formation. You can see what happened. It broke out, it went, then you show straight. So now what I'm expecting the price to do, since this is a reversal pattern, I'm expecting the price to go up, to make a retest to the structure, then you continue shooting down to this level where I said I see the price going. So looking at the price again, let's remove this one and show you this one. Yeah, looking at the price again, what I see here is that the price now impulse, then broke out, now is correcting. So now for this correction where we can spot an entry, I would like to see the price. Let me check the fib. You're using the Fibonacci now from the higher time frame. So you know that the fib, you take the Fibonacci from the correction from the top of the impulse to the lower of the correction. That's how I take my fib. So taking my fib here, or what I'm able to identify is this. So now the price is correcting. So what I'm expecting the price to do is go a bit higher to retest the recent resistance which it broke. So looking at this from the line graph, what I see is that this is the current resistance. This is the current resistance, and this price has rejected this area a couple of times, even this one. So this zone here, so this is where I'm expecting to be taking my trade, somewhere between those places. But because of how I trade, what I'm going to do is I want to make a sniper entry. So what I'm going to do is I'm going to have sell limits in those areas where I can take advantage of the market, and to see if it will go my way. It's called a risk entry. So I'm going to be on a risk entry with this one, looking at the Fibonacci and looking at the structure where the market is. If it doesn't work, it doesn't work, it's still okay. So this is how I'll be looking at the price. So going to, let's say, 30 minutes time frame. So 30 minutes time frame, so we can see the structure that is forming. You can basically see what the structure is doing. So the structure came in pulse, then it started correcting. So I'm expecting it to make the first touch here, it made the second touch here, to make the third touch here at the 0.618 Fibonacci retrace. So this is where I might take this is where I'm going to take my trade to the downside, and using the fib extension as my take profits. 0.618, this will be my last. The first target will be 0.278. So you can even see the risk to reward ratio is good. I have like 32 pips, 25 pips risk, 32%, 0.32% of my account, which has been risk reward is 1:4.52. So this is why I'll be taking my trade. Another thing is that you will notice that the price right now is at a very important point, which is 0.382 of the fib. So basically this point also the price might drop from here. So I'll be looking at it also, because the price, what the price might have done here, the price might have been passed, then it started forming ABC type of formation. Now the price is dropping, and what the price is doing here is just to go and form a double top, then it drops. So what I'll be looking, I'm going to look at the closing price for in the 4-hour time frame for this pair. When it closes, I'm going to look at the candlestick formation. If it gives me a go ahead, I might take my trade from here to the downside, which means my targets will still be these targets. So I'll be looking at it. Let me just show you how I will be entering this trade. So short formation, if I enter this trade, let's say I enter somewhere here on the H4, based on the candlestick formation, I'll just be taking this trade here. Then I'm looking at 5.48 risk to reward ratio. I'll just put my stop loss here, because I know that if the price, sorry for using my language, I know that if the price goes up, it will be going for this 0.618 level, and this might injure my account. So I don't want too many negatives. So if the price drops out, goes up, I'll just take a loss and wait for it to trigger my entry at the 0.618 level. So yeah guys, this is what I'm thinking of for AUDUSD. I hope some of you might take a note, will know what's happening, and understand what is happening to this price. So I'm expecting the price to drop, and I hope some of you see it the way that I see it, and I hope you'll take advantage of the market the way that I see it. I'm sorry for messy charts guys, I'm still adapting to YouTube. Yeah, I'm still adapting to YouTube. So This are my analysis. This is my analysis for AUDUSD, guys, as an intraday trader, and I hope some of you might take advantage and make sure you go hard, guys. Let's keep grinding. Forex is not easy. Forex messes you up sometimes, so you have to stay committed and stay, truthful to the process. You have to stay consistent with how you behave and how you do things, so that this can also reflect on your results, guys. So let's stay pushing, guys, and stay committed, and make sure you take advantage, and make sure you wait for the market to react. You just don't just react, wait for the price to do something first that you wanted it to do. Wait for confirmations, whatever that you use, to enter. Wait, just be patient, then enter the market. Make sure that you comment below with the pairs that you are looking at, and also suggest to me how you are looking at this pair and what is your opinion, and also other pairs in the forex market. Just tell me which pairs you are looking at, and what do you think the price is going to do. And also make sure you subscribe, you follow on on TradingView, you follow me on Instagram. You join my Telegram channel, and make sure that you subscribe, you comment, you like these videos, guys, because it's really important. It will give me a boost. Yeah, peace out.